Hello, everybody. Housing Bubble 2.0 news of the week. I'm Randy Patrick, your host, putting the realism back in real estate. Time to get into some stuff right away. I'll tell you right now that yesterday was a day I always look forward to. I just didn't get a chance to get the video done yesterday. It was the end of the month, and it was last Tuesday in the month. And that means what? That means Case-Shiller information is released. So I want to go over that right now. So that's going to be our topic for today. Trying to have these videos a little bit longer, a little bit shorter, and just getting more done. So more videos, less me yakking, and more to the point, right? That's what you guys want. Apparently that's what you're telling me, right? So anyway, hope everyone's doing well. It's Housing Bubble 2.0 news of the week. As I said, if you're not already a subscriber, could you please help my channel grow and subscribe? I'd really appreciate that. Also want to shout out to all the people I've been talking to over the past few days. Yes, we're here to help you with your real estate questions, concerns, investment opportunities, the whole bit. So a lot of stuff on the go. Just drop me a line, send me an email, put in your phone number, and we'll make sure we connect. For those of you that I haven't connected with yet, I'll be working on that later today as well. All right, and the rest of the week. So let's get right into the next scene here. So basically, Case-Shiller releases. It comes out the fourth Tuesday of the month. So this was the end of the month. It just so happened to be end of June. That's where the fourth Tuesday fell. And we're going to be looking at, the price growth here. So really, I guess you could say, the price growth is steady and it's still growing, even with the pandemic going on. So, people are going to go, well, how's that happening? Why are we still seeing growth? What's the reasons? Is it low inventory? Is it people just overpaying for property? What is it? Low interest rates? What's spurring this growth on? Well, today we're going to kind of debunk a little bit of that with respect to how Case-Shiller works. And I think it's about time that I did go into this because really, when you think about it, for me, I look at the information that's out there and I know people are going to run with this and say, oh, listen, market's great. Nothing's happened to us at this point in time. So everything's good. Everything's good. You know what I mean? So that's just the way it goes. So again, I think we'll explain a bit more towards the end how how the calculations are made, which should shed light as to why the numbers are higher than where we think they should be, or what would seem to be logical right now. But again, so once it's released, we get the news reports. So obviously, Wall Street Journal here says, U.S. home price growth accelerated in April. So it did. So some news media outlets are going to sort of work it. Some aren't. Home price gains remain steady in April, as the coronavirus sweeps across the country. Case-Shiller shows, that's Market Watch. We basically have on this one here, home prices heated up in April despite brief sales drop from coronavirus, S&P Case-Shiller says. So yes, we're going to hear stuff like this, all right? So this is actually the release. So, you guys can find online. You type in Case-Shiller Home Price Index. You'll come to a landing page, which is the Dow Jones page, and off you go here. So it really explains it here. So we're going to go through it right now. So essentially, it's released. This is the, I guess you could say, the April data. So Case-Shiller is a lagging calculation. I want you to remember that. So we're not talking about, June that just happened. It's too early for that information. We're talking about April here. All right. And basically there's one thing they want to note, though, is that transaction records for March and April 2020 for Wayne County in Michigan are unavailable due to the delays at the recording office caused by the COVID-19 lockdown. That's 2 months in a row now that we haven't had data. And that Wayne County, Michigan, is Detroit. All right. So that's why when you see the list, Detroit just is a blank. There's nothing for Detroit. So ultimately, in the end, we had a 4.7% annual gain in April, up from 4.6% the previous month. And essentially, here are the winners. I guess you could say Phoenix, Seattle, and Minneapolis posted the highest year-over-year gains among the 19 cities, excluding Detroit. And Phoenix led the way with an 8.8% year-over-year price increase, followed by Seattle, and then followed by Minneapolis. So let's get into some of the stuff right now. So again, interesting, but let's sort of debunk a little bit of this. So if you actually take a look and read what this is saying here, and to me, this is kind of important because it says each index combines matched price pairs for thousands of individual houses from available universe of arm's length data. So what they're really doing is they're going into public records, all right, and they're finding closings, and then what they're doing is saying, okay, well, if this property sold, in April for $200,000, and we look back, in time, and it sold, 3 years ago for, whatever, $150,000, then it has increased in value. So that's kind of the basis on how it's done. That's simplistic, and there's more to it than that. But I just want to let you know that it's based on, so you have to have 2 sales for the property to actually, I guess you could say, be counted as a transaction. So like a new home sale, for example, wouldn't be counted on this because the builder built it, you bought a new home. It's not, there's no 2 sales. It's not like you bought it, now if you sell it 3 years from now, it's going to be in the count, down the road into Case-Shiller. So just realize they're looking at single family homes, doesn't include condos, for this is all single family homes. And they do have some calculations which we'll go through. So just again, want to make sure everybody realize that. So this is interesting what the index does and doesn't track. So basically each index changes the price of the single family detached homes using the repeat sales method, which compares the sales price of the same properties over time, new construction excluded, which I said. And the types of sales tracked by Case-Shiller are called arm's length transactions. These are transactions where a home was sold at market value and the sales price can be used to get an accurate snapshot of the housing market. And this is important. So a transaction where a mother sold her home to her son for a favorable below market price would not be included in a Case-Shiller index. Foreclosure sales are included in the indexes because a sale between a bank and individual is considered both arm's length and a repeat sale. So foreclosure sales, meaning REOs, foreclosure auctions I'm assuming are not, basically, I don't think foreclosure auctions are going to be included in this. It's foreclosure sales. Like, in other words, the home comes back as an REO. It's owned by the bank, and therefore that's a sale when they sell it back on the open market. So please keep that in mind. But again, so the difference here being the fact that it's looking for repeat sales, as opposed to, say, when NAR, National Association of Realtors, puts out their existing home sales report. They come up typically with a median price point, and that's based on what a real estate agent enters into the MLS as a sold price. You see, so that's sort of like real time. The problem with public records, just so we know, is that you could sell a home, last month, but it hasn't hit public records for a couple of weeks, 2-3 weeks, maybe a month. So just because you transact a sale today doesn't mean tomorrow the property appraiser website, the public record website is updated immediately with that information. It doesn't work that way. So what happens is when you do a transaction, it basically is, a deed is recorded. The deed is recorded, at the clerk. It depends on the processing time, the whole bit. So it can take a few weeks, if not a couple, month or more. Some locations faster than others. Right now, with the pandemic, I'm going to say some of the county offices and recording offices are slower and may not be fully staffed. So there could be some impact on that. But just realize that it's not like, with the MLS, where if you're a listing agent with a real estate transaction, you actually have, I believe, it depends on region. For me down here, if someone sells a property today, I have 48 hours to mark it as sold and put in the information, like who the agent was that brought it, the price, were there any concessions, this and that. So that's why NAR and those type of pieces of information are only delivering to us median home prices on values that they're tracking through the MLS. Basically, I guess you could say here, this is Case-Shiller's public records, which doesn't have to be MLS based. There could be off-market sales that they're going to capture as well too. So that's the sort of scoop on that. So just realize it. So this is the graph, and ultimately when we take a look at this, you've got Case-Shiller has 3 indexes, all right, our indices, and there's the 10 city composite, the 20 city, and the national. The national is the thicker dark line there, all right, that's the national index. So if you take a look at it, you can see where everything peaked up, in 2006 and 7. You can see where we went down to the trough, all right, 2011, 12, and you can see working our way back up step by step to, to over the, the last index, high water marks to where we are right now. So this is sort of what I look at. You can see the big peak, the dip, and we're back peaking right now. Okay, so this is interesting. So again, this table shows the housing boom bust peaks and troughs throughout the 3 composites, along with the current levels and percentage changes from the peaks and troughs. So the national peaked in July 2006. The trough was in February 2012. And where we are right now is we are 62.5% gain from the trough. which is almost 18% above the last peak. So we were almost 18%, 17.9% higher than the last peak, which would have been July of 2006. For today's, simplicity, we'll just sort of focus on the national level. So you can see, from the peak, it dropped. When people ask questions, going, how, if we have a housing crash, how far is it going to go? How far is it going to discount? Well, we don't know, but just for I guess you could say relative, comparatively speaking here, nationally we dropped over 27% across the board during the last housing crisis and crash. The 20 city and the 10 city composites, which are the major metros across the U.S., 35%. You see, and that's the average. There are locations that only fell 10, 15%. There are locations that fell 56%. So it just depends on where you were, housing activity at that point in time. But I like to see going, okay, we are 17.9, almost 18% above the last peak, which was in July 2006. All right. And realize that, because we see the data now, this is great. And quite frankly, Robert Shiller, who's one of the co-creators clearly of the Case-Shiller, index here, he's come out saying that, we before it crashed, so the crash didn't start to 2007, 2008, but we peaked 2 years in advance, you see. So, peaking, if you're following this, we've been peaking. So it's not like, hey, so a crash, I guess my point is, there's indications where markets are at prior to the crash. All right. So just keep that in mind. All right. Let's go through the list now, which everybody wants to know. I'll post a link to this, but again, you just type in, Case-Shiller Index, and it's going to take you to the website. You can look at this and download this yourself. All right. So Atlanta, though, and for me, it's the year-over-year change. So they're looking at, sales, where they were last year to where they were today based on the sales pairs. So Atlanta up 4.5%. Boston up 4.3%. Looks like Charlotte 5.6%. Chicago, a little bit of an uptick here, 1.4%. Cleveland had a good month of 6%. Dallas 2.8%. Denver 4.0%. The blank line across, as I said, that is Detroit, because the past couple of months we have not seen data from the county that Detroit resides in. I don't know whether whether there's other things going on there that they're not showing to us, but for whatever reason, we can't get the data. Vegas up 4.7%, so it's kind of leveling off. Los Angeles 4.1%. Miami 3.9%. Minneapolis 6.4%. New York 2.5%. Phoenix leads the way as always with 8.8%. Portland 4.3%. San Diego 5.8%. San Fran 2.8%. Seattle 7.3%. Tampa 5.8%. And Washington 3.8%. So again, we're seeing some reasonable year-over-year increases. Now, when you take a look at this, if you think about that, how they're calculating these sales pairs, and you look at the increase in price point, we don't know how many transactions are going on. So I don't know whether Atlanta has 1,000 transactions that they're analyzing or 100. You see, we don't know that. It's just what the values are based on the sales pairs and how they calculate out. So I don't know. Again, there's things that I don't know about this and what could influence whether it goes higher or lower on the year over year. But that's what we're looking at right now. So funny enough, you've got some markets that maybe will be changing with some of the things going on in their local environment right now. It's too early to tell right now. I would expect to see some decrease in prices as we go forward. But this is really interesting here. So there's a website called wolfstreet.com. The gentleman's name is Wolf Richter. I really like what he puts out there. It's wolfstreet.com, and he actually has, you can see Housing Bubble 2 little section up there that we can talk about, or he has all his articles he posts in there, and this to me is very important that we go through this, because it really explains kind of nicely why we're seeing these high prices still, and that's why people are going to sit there and be frustrated and say, well, logically speaking, we would expect to see sales slowing down and prices dropping, but on this index we're not. So what's the deal here? Well, as he says, there's sure a lot of brain dead misreporting about the Case-Shiller home price index this morning, which would have been yesterday. No, it's not a reflection of home prices during the pandemic. Be patient. Reporters or spaghetti code algos should have read the methodology before misleading their readers. And that's really important here, because, as I said, when we start looking at the detail of Case-Shiller and how it's calculated, it's not a true representation of what actually is going on in the month that it's reporting. And that's just a function of the sophistication of of the calculation and how the data runs through. So basically, the Case-Shiller Index operates a 3-month rolling average basis, and the price data is collected from public records. So the release today, titled April, was the 3-month moving average for deals whose data became available in the county records in February, March, and April. There is also a big time lag. There's also a lag time between when a deal closes and when the data becomes available in the county deed recorders. So what the Case-Shiller showed today were closings that occurred in prior months and that became available in the county deed recorders in February, March, and April. This included some of the deals that were closed in January and excluded some of those deals that closed in April. So when we take a look at that, that's a pretty broad range. So we know that once the new year hit, we had some brisk sales and we saw some stuff moving in January and February. And then as time, and even in March too, and of course as April came on board, we saw slowdowns and there was issues with lack of closings, people, having their loans, I guess you could say, canceled on them, people walking away from deals because they didn't feel safe, etc. So stuff was happening really in April, and we're not going to see much reflection of that in the Case-Shiller information here. So, okay, the pandemic's impact was even smaller. In April, sales pairs by being stunted accounted for only 34% of the total sales pairs in the 3-month rolling average. Last year's April accounted for 41% of the 3-month count. So in prior years, April accounted for 39% or 44% of the 3-month count. Okay, so in other words, price changes in April were further watered down in the rolling 3-month average by being seasonally unrepresented in terms of volume. So, and this is a good example of how we write down here, saying, so for the Case-Shiller Index for April in the Bay Area, the first city of the 20 city indices to reflect the pandemic and the shutdown, because the San Fran area was the first to kind of, close everything down. We have to keep that in mind. But if you read it, contains roughly speaking 80% of pricing data from sales before the pandemic and about 20% of price changes from sales during the pandemic. So when we look at April and you're headline hunting and you go, oh, well, April's Case-Shiller looks great. We don't have a problem here. I predict a V-shape of housing recovery. Let's go. Maybe that's not quite the true representation. That's why we always have to take things, as I say, with a grain of salt or with a drink. I don't know. You know what I mean? So I like the Case-Shiller as a measuring point because you have to have a measuring point for the housing market. So, it's certainly a very sophisticated and data-driven way to model the market and see where we're at. But when we start looking at this, for me, I want to make sure that we don't run away with the market and go, oh, because I'm already reading in other blog posts and stuff going, V-shape recovery because of April. When April isn't a true representation of what is occurring during the pandemic. So we're not seeing the effects of that yet. And the problem is we're watching everything in real time now. All right. I'm watching stuff happen today in parts of the country before I made this video, and I'm watching it in real time. And so we have the ability to do that. Realize that real estate values, comparables, etc., are based on past closings that take time to get recorded in the public records to be included in the data calculations on value. So that seems, it's always the tag along, drag along situation with pricing points, etc. So now, so I like that. It basically is the National Home Price Index, which is cited in the headlines this morning, was even less impacted by lockdowns and the pandemic than the San Francisco Bay Area Index because of the markets, the 20-city index that locked down after the Bay Area. So there we go. So with what the National Index told us today is nearly all based on home prices before the impact of the pandemic. It will be under 3 months. The index to be released on September 29th before every month in the National Case-Shiller Index rolling 3-month average fully reflects home prices of sales that closed since the beginning of the lockdown. Each month will get us a step closer, and even then it will take a while before house price data is sticky because house price data is sticky and moves slowly, so be patient. So, that's good advice from Wolf Street here. And again, I really like his website. I like the fact that he takes time to explain this. If you go to this, I'm taking parts of his overall article. He's got charts and graphs on there, etc. So it's very, it's good. It's well done. It's a source that I trust personally. So check it out, wolfstreet.com. But the point is made that, you can't jump and go, everything is great. like I said the other day, there's that Lego movie, right? And everything is awesome, right? That's the main song. Well, everything is not awesome yet. We don't know. And if you don't think that the number of unemployed people, the out of work people, second wave of shutdowns now in major cities and major regions across the U.S., more layoffs, stimulus money ending shortly, foreclosure moratorium still going on, eviction moratorium still going on. If you don't think any of that's going to impact in the future, then I don't know what to say to you. All right, then everything is awesome in your world. What we have here is a lot of potential issues coming our way. It's not able to be seen yet with statistics. And as far as I'm concerned, I'm not going to run up the flagpole going housing's in a V-shaped recovery, because quite frankly, it's not. All right, guys. So that's it for today on this one. I wanted to explain that. And again, it's something that, like, I use, as you know, a couple of years doing this channel now, I use Case-Shiller as kind of measuring point. And, it's been slowly growing every month. And we've seen a couple little dips here and there, but we haven't seen, we'll call it, larger decreases or more than one or two city decreasing here and there. So it's a matter of time. So having said that, if you're looking to get a hold of me, there's my email up on the screen there. Send me an email, put in your phone number. I'll be working to get back with people all this week. A lot of stuff happening here. As I said, if you're looking for information on buying and selling down here where I live, certainly drop me a line if you're looking for investment opportunities, because that's still happening and there's different ways to work through this market. Give me a shout, reach out to me. And thanks again for the likes, views, comments. Look forward to speaking with you probably tomorrow with another short video. Take care, guys.